Guys, the Prime Minister of India has just asked Indians to stop buying gold. I mean, check this out. Clearly, the country is suffering from a little bit of a foreign exchange reserve crisis, given what's happening with the Straits of Hormuz, etc. Um, yeah, they're in trouble. I mean, look at the price of 1 gram of gold in Indian rupee. That's the Indian currency. That is going parabolic. Um, and that's obviously was a lot of stress for the government. And by slowing down purchase of gold by Indians, that could alleviate some of that pressure. Um, but the funny thing is, a lot of currencies already look similar to this, maybe not quite as severe. And we are going to analyze if, as cycle analysts, want to know would such action mean anything? Let's bring up the price of gold in USD. Right, this is the COMEX contract. We have downloaded the data from the 70s. This is the longest time series I've got. I have downloaded it until the end of June 2025. So this is going to be our training data. We're going to build a cycle model and make some projections into the future to see, what comes next for gold. What I want to start with is a wavelet analysis. And let me explain a little bit of what that does. This just shows any strong periodic patterns in a price series. And in this instance, it does so if you see any long and stable red shaded regions. That tells you there is high likelihood of a periodic pattern with that periodicity. And we can see something here, right around the 2-year mark, and something right around the 4-year mark, which probably means it's one pattern, and it's because those are harmonically related. If we then get a little bit more granular and run a spectral analysis, here's the spectrogram. And it does show us there's a massive peak here at the 4-year mark. So that tells us there is a strong 4-year periodic pattern in the price history of gold. And we can actually have a little bit of a look to see what that history looks like. If we, no, let me do it this way. I'm going to show two panels. In the upper panel, we've got the price of gold. In the lower panel, we have the rate of change. And that's actually where you'll see the pattern more clearly. It appears that, on average, every 4 years, the price of gold either declines relatively severely, or it slows down, it consolidates and goes sideways in what is a long-term uptrend. That is the dominant periodic pattern in the price history of gold. What we can do is map that onto this the current 4-year period with the starting point of our where our training data ends. So 1 July 2025. What it shows is some of the most consistent zones in the past. So typically during this period here, oil prices go up. Same here, same there. Almost as if there's sort of 3 major waves of buying before you head into a period where the price of gold slows down, corrects, goes sideways, or actually declines. What I want to do is bring that onto the main chart with a little bit of fine tuning just to see what that projects beyond our training data. And here you go. A new 4-year slice with these waves of buying before you head into a period where oil prices slow down or correct, as in, we'll get a good old whack. Next thing I want to do is we are going to bring up some of those 4-year slices. I want to bring them up and then rank them by the correlation to the most recent year. Turns out I only have 2 that have a positive and non-single digit correlation. What that allows us to do is draw a projection, right? A projection beyond our training test data border. And what that projection shows is clearly those waves of buying up until you get a period of correction. So at this point, let's bring in the test data, which is of course now everything since July, 1st of July last year up until, we are in May. Bring that in, boom. What we see is the realized price action is still following that historical pattern, right? A wave of buying. This correction we've seen after that parabolic price rise is essentially right on time. But it appears that if history continues, we're going to have another wave of buying starting, I'd say, by October of this year. In fact, if we go back to that list of slices, I'll show you that one of them has a very high out of sample correlation, 90%. And if I zoom on it, you can see that the swings are very close. So that's telling me is if this historical pattern holds, we need to be buying the dips. There's no change here. We still need to be buying the dips. There's probably going to be a new wave of buying coming. I would say I estimate by October. So perhaps this low we saw back in March, that was it for this phase of corrective action. Or maybe we're just going to chop around sideways a bit up until September, October, and then we start another leg higher. So no change in that message on gold, probably all the way up until late 2027, early 2028. Because it's only then that we head into that sort of 4-year cycle beat when we expect either a sideways consolidation or an outright decline in gold prices.